Welcome back to Creating Cashflow. I am super excited for this episode, this show today, because we are going to be looking at something that I've always wondered, and I've never put the pen to paper and busted out the Excel spreadsheet like this before. I really want to be able to answer if it is worth it to sell stocks to invest in real estate. So a little bit of the background here is I found a duplex property that I'm pretty interested in buying and investing in to just generate cash flow. I would rent out both sides and look to increase my cash flow. So to buy that, I have a certain amount of cash on hand, but I would need to sell a certain amount of stocks to be able to make up for the cash I need for the down payment. So what I'm wondering is it worth it to sell my stocks right now to invest in real estate? And there's a lot of pros and cons here. And there's a lot of math that we'll be looking at, but it's all broken down easily. So hopefully this doesn't scare you away, and hopefully this is helpful, because I've never broken it down in quite this level of detail to figure out if it's worth it to sell my stocks. So on a quick note, in today's market, my stocks are technically up from when I bought them, but they aren't way up. So I know that they'll definitely be going up a lot higher. And just a year ago, or even 6 months ago, the stock was valued at way more than it's currently valued at. So I know that I wouldn't be getting a great price for the stock, but technically it's up. The other thing that's important to know is I care a lot about investing over a long time period. So I want to look at things in terms of 5 years, 10 years, 20 years, rather than right now and saying, hey, what will this be worth in 6 months or 60 days or even 1 year? I don't think that 1 year is long enough time period when you're thinking about investing. So I'm going to share with you my spreadsheet, and we'll get that open. And then from there, I'll walk you through some hypothetical numbers and a hypothetical situation. It's not my exact situation, but it's pretty close. And so I think that it will be very, very helpful. So jumping into the spreadsheet, the breakdown of cash needs. So as you can see, in this hypothetical situation, let's say I have $35,000 cash on hand. So I have $35,000 that's just sitting in the bank doing nothing. The cash needed for my rental property or for my investment, the investment that I want to make, is $80,000, which means that I am $45,000 short in cash. So I need to figure out how to get that cash, and I'm looking at selling my stock to be able to get that cash. So my current stock portfolio, and we'll dive into this a little bit lower, but let's say my current stock portfolio is valued at $67,570. So the percent needed from my entire stock portfolio is almost 70%. So essentially I'd be selling 70% of my stock portfolio to be able to get the cash that I need to invest in a real estate property, or in this particular real estate property. So let's look at the stock situation first. So if we come over here and we look at the stock gain, let's imagine that the stock that we're looking at, the one that we own, is Apple. So the ticker symbol for Apple is AAPL. And our current quantity, let's say it's between 450 and 500 shares. So we're going with 466, which means the quantity that I would need to sell to get that money would be 310 shares, which the current price right now, and I know the market goes up and down and it's bouncing all around, but as I'm recording this, it's about 145 bucks, which would mean my current value is 45,000, which is the cash. It's that gap that I need. So 310 shares at $145 price means that I would get the 45,000. My average cost for these shares was 130 bucks. So I didn't buy them all at 130. Let's say I bought some of them at 100 and some of them at 160, and now the average is 130, which that actually complicates the situation a little bit. So let's just stick with an average of 130, because then we'll get into some crazy tax things if that's the case. So that means my current gain while I've owned this Apple stock would only be $4,729, and that's the gain based on the 67% that I would need to pull out, because the rest of it, it would be able to stay in the stock market and keep growing and keep spitting out dividends. So the projected price in 5 years, I guess this is kind of the stickiest part in this entire equation, is the projected price, because there's a lot of people that will make calculations on what they think Apple stock will be worth in 5 years. So I kind of came up with my own formula based on the past 5 years and what's been going on over the past 5 years with Apple stock. And then I came up with a number that was pretty high. It seemed a little bit high in my opinion. And then I went and did a bunch of research on what other people are projecting Apple stock to be in 5 years. And there were people projecting it to be even way higher than I had imagined and lower than what I have here. So I think just for simplicity's sake, we're gonna go with the idea that our projected price for one share of Apple stock in 5 years will be $375. That means that the projected appreciation for the stocks that we would have pulled out would be $76,109. So the total gain that we would be getting is $31,000. So that's basically the $45,000, which is our current value, going up to the $76,000. So I hope I haven't lost you yet, but basically all we're trying to look at is the stocks that we pull out, that 70% of my current portfolio, what that would look like if we just didn't touch it for the next 5 years. So we have that number of $76,109. Apple stock also has a dividend yield, which basically means they pay out their shareholders on a quarterly basis. So every quarter they pay from about 22 to 23 cents per share to stakeholders, which means that of the 310 shares that I would need to sell, that would have generated $71 a quarter, which comes out to $286 a year, which then would total out to be $1,428 in cash flow that I would be missing out on. So overall, for doing nothing, my increase for appreciation would go up just over $30,000, and I would cash flow just under $1,500. Okay, let's come up for air. So that is on the stock side. So now I want to take a quick look at the rental property side, which is really, really interesting. Oh, and I have here, right here. So projected value of stocks that would be sold is $77,000. So that's the 5-year projected appreciation plus the cash flow that we would be getting. So if we go over here, I'm going to skip a section really quick up there. But if we come down here to this rental property section, so the cost of the property is $349,900, so $350,000. The down payment is going to be a 20% down payment, which would be required if you're buying it as an investment property. We also don't want to pay additional interest, which would be PMI. We're not interested in doing something like that. It also might not even be an option when you're looking for a loan as an investment property. If I was moving into half of it and then renting out the other half, then potentially we could put less down. But also, the more we put down on our rental property, the more likely we are going to be able to cash flow on that property because our mortgage payment won't be as high. So we're putting 20% down, and then our closing costs is about $10,497, which means our total upfront cost is $80,477. So about $80,000 to get into this rental property and to have to start paying off the mortgage. There's one important thing that needs to be noted when looking at the rental property is to be able to have that additional $45,000, since we need $80,000, essentially we need $80,000 to be able to get the rental property. We only have $35,000 and we need that additional $45,000, which means to get that, we would have to sell, as I already mentioned, 67% of our stock portfolio. Selling part of our stock portfolio will require us to pay capital gains tax on those stocks. So that's actually going to come out of the rental property as an additional cost. So I looked up what what the capital gains tax would be for me, and it was about 15%. So that's being calculated here, and it comes out to $709 that I would have to pay in taxes to be able to get that $45,000. So the property that I'm looking at, based on all the numbers that I can run and everything, all of the tools that I can use, it's looking like it should be able to cash flow just over $700 per month. So that's $731. I have another video where I talk about the tools that I use. A tool mentioned here is called Deal Check. I'll link the other video if you want to see how I look at deals. But basically, according to Deal Check, I'm guessing that my monthly cash flow will be anywhere from about $600 to $1,000. So we're kind of going with in between $731, which the yearly cash flow then comes out to be $8,772, which is just your monthly cash flow times by 12, which comes to your 5-year projected cash flow, which is $50,000 a year that you'd be cash flowing from this one rental property, which sounds pretty awesome. So let's keep looking at it. The other thing that happens is, just like the stocks, the home will appreciate. So we're looking at appreciation over 5 years. The appreciation would appreciate to $405,000. So if I was to put the home on the market in 5 years, right now the projected value that I would be able to list that home at is $405,000, which if I would then sold it for $405,000, my gain on sale would be $142,000. So where I'm getting that number is a bit complicated, but essentially if I sell it for $405,000, I bought it for $350,000, and then I'm paying off, I've already put $80,000 into it as a down payment, about $70,000 into it as a down payment, and then the renters will continually be paying their rent, which will go straight to paying off the mortgage, which will increase the equity that I own in the home. So by the time I have to pay off the home, the remaining loan amount is what I'll have to pay off. I won't have to continue paying the interest from the loan. All I'm going to be doing is paying off the rest of the home. So that would leave me with $142,000 in my pocket, which means that the total property gain at year 5, with my appreciation of the rental property and my cash flow from the rental property, is going to be about $190,000, just over $190,000. So initially, when I first ran these numbers, I was like, oh my gosh, I could either have, let's see, the $77,000 from keeping my money in the stock market, or I could have $192,000. And I'm like, that's a no-brainer. Obviously, I should sell my stock. But then I realized that I wasn't looking at this correctly, because with the rental property, it's getting a little bit of help, because not only is it taking the $45,000 in stocks, it's also getting a $35,000 cash injection, because I'm putting in, to be able to get that down payment, I'm putting $35,000 into that rental property. So what this is actually comparing is $45,000 in the stock market versus $70,000 on a rental property, which obviously is an unfair comparison. So now we got to look at the stocks as if we were also going to be investing that $35,000 in cash into the stock market. I'm calling it the stock injection. So what you can see here is the stock injection. The total cash that's being invested in is $35,000, and that would be at the purchase price of $145,000, which is the current price. So I couldn't get them at $130,000 again. Right now, whatever the price is, I can buy them for $35,000, and that will buy me an additional 241 shares of Apple stock, which the dividend payout for that over the course of a year is going to be $222. That means that I would be cash flowing an additional $1,110 over the course of 5 years. And the projected appreciation is an additional, would go to $55,000, which means that the total Apple gain at year 5 with the additional cash being injected is $133,000. So that is really, really interesting to me, because if I come over here, I notice that my total Apple gain, injecting an additional $35,000 into where I currently am, will pull me out at $133,000, and my total property gain at the end of 5 years is $192,000. So before we look at this as like one's completely obvious, I am projecting a few numbers here, and I don't actually know the future. I'm just putting it out as a projection. The other thing is, I've never done this before, so if you have thoughts and comments on how I probably should do this or how I could be looking at it differently, frankly, I would love to hear them. So let me know. And if you're finding this helpful, be sure to hit that like button and make sure you subscribe. So now what I'm looking at is the total stock cash flow versus the total rental property cash flow. So I'm right down here. So the total stock cash flow is going to be $2,538 versus the rental property cash flow, which will be $50,000. So the other thing that is kind of interesting to note is the stock cash flow. Not only is it significantly less, you also only get it quarterly, where the rental property cash flow you're going to be getting on a more regular basis. You should be getting that every single month, which means more money in your pocket right now. The appreciation value of the stock is $131,000, while the appreciation value of the rental property is $192,000. So looking at these side by side, it seems like the rental property is a much, much better investment. What this is not taking into account is the fact that the rental property will take work. It'll take a significant amount of work, because with the Apple stock, I don't have to do anything. Literally, I could go and within 5 minutes buy $35,000 worth of Apple shares, sit back and never touch it, never do anything ever again. Except in 5 years, go back and sell out of my Apple stock and realize all of the value that happened. So that is little to no work. The other thing is it's pretty low risk. Apple is a pretty dominant company. In my opinion, it shows no signs of slowing, which is really, really great. Seems like a great bet. So that's good. But with the rental property, it's going to take work. You're going to have to make sure that you have tenants. You're going to have to make sure that it's always full, that they're re-signing their contracts, and a million other things that come along with owning a property. Even if you have a property management company, you still have to stay on top of it. So you don't just look at how much more money it's going to be worth. You have to think about your time and what you're willing to invest. The other thing you have to think about is what you are going to do with the money that you are cash flowing from the rental property. Is this the type of money that you're going to be living off of? Or in my scenario, I currently have a job and I plan on having a job over the next 5 years unless things drastically change in my life, which means I can continue paying for my expenses with my job, and then I can take that cash flow from the rental property and inject it back in with dollar cost averaging back into the stock market, and I can put it back into Apple. And with an upcoming recession, that might not be a bad plan, because the Apple stock, like I said, isn't very high right now. Even though it's higher than when I bought it, it's pretty low overall for what Apple stock should actually be worth and be valued at. So with that, buying the rental property and having an extra $700 to $1,000 every single month to invest into Apple stock, as that price continues to dip over the next who knows how long, maybe the next 6 months. The average recession lasts 1 to 3 years. So I could potentially be buying stock at a very low price, or at a very discounted price, if you will, over the next 1 to 3 years. That would be some crazy math that I don't know how to do. I don't know how to project, but it would be a really, really advantageous thing to do. So if I'm injecting that money back into stocks, I can't really think about that money as cash flow because it's not coming to me. I'm putting it back in the business. So if it's cash flow that I'm looking for and I want to say, oh, I can live off of 50 grand a year, then the rental property is great. I can just live off my cash flow, and that's a pretty smooth thing. I would probably invest at least half of that money back into the stock market. So my actual take-home cash flow, maybe I use it for my spending cash or whatever, but that would just be the additional $200 to $500. If I say I pull in $700 to $1,000, then I put $500, like $350 to $500 into the stock market, and I let that appreciate and grow. So overall, I'm actually really, really surprised how these numbers shook out. Honestly, I thought that it would be super, super dumb to sell out of my stocks right now. And while I'm not getting the value that I necessarily want for them, I have another solid plan where I should move that money to immediately. So if I could get into that deal immediately, great. If I can't get that deal and my money's sitting there and I have to rebuy into Apple stock, or I have to figure out something else, then there's a little bit of risk there. So overall, I'm thinking that I should be leaning towards getting the rental property. The other thing is I want to get into real estate, and if not now, then when will I get in? I know there will be a lot to learn. I'm sure I'll make some mistakes along the way, and this could be a great opportunity while I have a full-time paying job. I found a property. I have some other money that will still be growing and appreciating in the stock market. And at the end of the day, I'll still own a property that even if it doesn't increase in value a ton, it'll be a real estate property that I can then offload and liquidate and whatever. So worst case scenario honestly doesn't seem that bad. Best case scenario seems like I'll be making some serious money. And the interesting thing is, if I do nothing, let's say I do nothing, just leave it in Apple, or I invest my $35,000 in Apple and that's it, then I'll be coming out with a total gain of $133,000. But if I do something, I'll be coming out with a total gain of about $193,000. So I could look at that as me paying myself $60,000 to go learn real estate, to go learn what it's like buying a duplex, getting renters, doing property management. It's not like I would be doing it for free. It would feel like I'm doing it for free. But if I remember the numbers and I relook at the numbers, I would actually be paying myself to do this, which I think is pretty cool. And it's maybe just a small mental change, but to me, it goes a long way. So that's basically what I have for today. It was a lot. So if you're still watching, I would like to hit that like button right back to you. Hopefully I earned a like from you. Hopefully I earned your subscription. And also, if you have any questions, comments, thoughts, anything, add it in the comment section down below. I would love to know. I'd also love to know if you have stocks and you plan on selling them to buy a real estate property. I'd love to know how you came to the conclusion that it was smart to sell your stocks to buy real estate. Anyway, thank you so much for watching. And as always, remember that the mind is a powerful thing. So what you focus on is very, very important. What you focus on will grow. So focus on the things that you care about most and go make your dreams and your goals happen. I'm chasing mine. I hope you're chasing yours. Stay grounded in gratitude. See ya.